Okay. All right. I'll keep it simple. As usual, let's look at the economic calendar, see what's what. Any comments or questions? What's been happening since we last met? Is there any significant event or that has taken place that could be moving the markets or a particular chart? Today is the 24th. Let's see the Monday. Any question?
I think for me, I'm just watching the markets, like I'm watching like GBSD and as well as GPUSD as well as the
Mm.
gold. They're just
Oh,
going up, and I'm starting to wonder. I don't know how to trade them now. I've become very scared of the way it's going.
no, fear not, fear not. Let's look at that. Let's switch screens. We'll come back to the economic calendar. Um, Remember we spoke about support resistance in the most basic form, and I said you want to keep it simple. That's the best way to identify entry points. So GBP are just let's do something. Let's see for our chart. Let's mark out and see if anything makes sense. Today is the 24th. 24th, there's your entry for today. Boom. We got it yesterday, actually. Right? You got up, down. Let's go to the 1 hour so you can see it much more obviously. Previous resistance.
Mm.
Okay. Resistance. Finally, close above. This is the 19th thing. The 19th was Thursday. What's this thing saying to me now? Those systems may affect my oil.
That
Okay.
stay was really crazy yesterday. I for one, when I saw the way the stay came down, I was thinking it's probably going to break,
Yeah.
it was very powerful.
But honestly, a lot of traders have been texting me, and I see in the groups that the different groups that I've set up, it's been rather very choppy. A lot of people being stopped out prematurely. I mean, it's I wasn't immune to that as well. I mean, gold has frustrated me in the last, especially on Friday last week, Thursday and Friday last week. It just wasn't playing, you know, nicely with me. So I eventually decided to opt for cash and just sit on my hands and not do anything and see where it goes. Because when you look at a chart sometimes for too long, it just hypnotizes you, honestly,
Yeah.
right? You
Yeah.
don't see what's going on. So, and we will look at the dollar index as well. You'll see that it's actually, last I checked in the morning, this thing has just been going sideways. Yet, you know, other charts seem to have some sort of direction, not really giving us proper, solid, convincing entries, but yeah, definitely still having those bullish momentum. GU, EU, gold, especially, So yeah, there we go. We finally indeed close above. Somebody would have caught it there on Friday, but as you can see, we came back into it again nicely on yesterday, the 23rd. There should be at least about, I don't know, 100 and something odd pips. Yeah, 140, 150 odd pips. That's in. So, like I always say, you don't want to come to the party late. So that one has already messed up yesterday. Let's look at this previous level where it's decided to come back down. Resistance, we violate, go sideways, boom. Today, there we go again. Just digging one more time. So, closing above that previous level of those previous high, boom, and then giving you the push to the upside. So today, had you seen it in one way or the other, that would have been at least sort of plus minus 65 pips, right? So where to? Of course, we know we are definitely bullish. That momentum is still very much there. What is the next level of interest? That is the
Yeah.
question,
And
right?
it's
I
almost
think we'll.
approaching the zone we drew last time.
I beg your pardon. I don't know if it's just my.
And it's almost approaching the zone we drew last time.
Yeah. So what we'll do is we'll do thorough analysis just now on GU. But let's just do it. Let me switch screen tricky to do the time frames. It just doesn't, you can maneuver or navigate. Where are we really going?
We're still on your
This one.
meta trader chart.
Oh, I'm not sharing it. Hold on. Yeah, there we go. Are you seeing it now?
Yeah. Okay.
PUSD, GBP market coming into that point. Six is the next point of interest. 1.3678. 1.3678 is where we are headed. Okay. And let us
Well,
see. Let us see. Let us
if you
see.
look behind the point where we are right now,
Oh,
it's set
I
to
don't know
be a
if it's
very.
just my network, but I'm struggling to hear you.
Can you
Uh,
hear me now?
try again. Hopefully it's.
Can you hear me now?
Are you hearing Bruno nice and clearly? Somebody.
No,
Or is
it's
it
not
back
very
on? Okay, so
big.
it's.
Oh, you're not hearing me nice and clear.
There we go. It's back. Yeah, I
That's
can
the
hear you now.
Okay. So as I was saying, I said if you look behind,
Yeah.
that zone it is right now looks like pretty, pretty interesting zone that I'm just thinking might actually react in that zone as well.
It's
Get the price.
breaking again, and you have something in that line. Sadly, it is breaking. Not hearing you nice and clearly on
How
my
is it
end.
now?
So you
Those wicks you have on the daily time frame behind you. So it's making it
behind? You mean to the left?
those zones.
to the left.
It's goes. It comes and goes. Unfortunately. Let's try and soldier on. Let's try and see the bullish momentum. Let's just check the inbox. Maybe we might catch your comment there. I mean, the zone to the left in the current price. Okay. Are they invalidated? Uh, where I am,
To
levels
the
one,
left.
daily resistance, bounce back height, sorry, not on the definitely had a strong bullish momentum. Two has had a significant retest, 1.32. Yeah, 1.32. Then where we started to correct to do a lot of interest, we have then also violated that, and then we've pushed up. So the next point definitely would be that 1 point, well, chart where price has been is 1.36. But remember, I've said we eat it piece by piece, this elephant. So 1.35, 1.36. That's how you're going to tackle it. That way it would be easier. And hold on, remember, I said piece by piece 23, was it 26, 10, 20, 26, 40, 50. You want to go at it that way. And I suspect if we look closely, we will definitely find some sort of actually entered at, but we have missed it. Well, personally, anyway, I have missed. Yeah, this is definitely you. And how do we want to play this? Let's see. Let's look at that 1 hourly time frame one more time. There are two ways. Of course, there are two ways going about this. Let's say level of interest. We are 1.339. We're close to 1.34. We could mark out that 1.34. I think you get the point. Let me 1.34. I can then go in and clearly in between. I'm looking at that point. We definitely let's say like I said, if we close above 1.34, then 1.348 might be the first.
Yeah,
Simply
so
based
that
on
zone I was
this is
trying
where we
to talk about
our
earlier.
top. Right? 20, is this 29? And then we came down a bit. So we kind of we as we target GBP USD, we tomorrow share a trading plan on GU. Let me just see how it plays out. But you don't have to necessarily. Then let's quickly look into that gold quickly. Let's check here. Yeah, let me switch screens quickly. And go back to here. Gold. Are you seeing my MetaTrader?
Yes.
So as you can
Yeah.
still see, those pending buy limits, I still have them at 25.30s. We are not getting there. We just have, especially with the geopolitical events that has taken place with the renewed conflict with in the Middle East there, that has
Mm.
also definitely contributed to the bullish momentum on gold. But not only gold, what what other commodity has pushed up because of this conflict? Remember, what do the Middle East have?
Oil.
Oil, right? So oil prices also uh, have gone up. And it's not of only because of the geopolitical event or that war, but it is also because of China. Does anybody know what happened or what has China done? The Bank of China, anyway. Any idea?
No,
Uh-huh.
No.
Okay. So the Bank of China have decided to cut what we call the reserve requirement. And I'll be going into these in the monetary policy sessions, the reserve requirement, right? So basically, briefly, what it is it's an expansion in terms of monetary supply. So they're increasing the money supply within the economy. And the whole point of increasing money supply is mainly to stimulate the economy. So remember, oil prices have been coming down mainly because of oversupply. Why do I say oversupply? Because that one of the largest, if not the second, I think that the first would be the US in terms of consumers of oil. They are the largest, followed by China. And China has had a very sluggish economic performance. Honestly, since coming out of that pandemic, things haven't really gone back to where they were in China. And so now they are trying to stimulate that economy. So with China's sluggish economic activity, that only meant that they are not consuming as much oil as they usually would, right? And that's why the oversupply and the prices would come down or have been on. That's why they've been coming down. So now with this expansionary monetary tweak, if I can put it that way, increasing their money supply. This is, meant to stimulate the economy. So if the economic activity does increase, then we would definitely see their demand for oil also increase. So we've got those two main points which are driving oil prices higher. We've got that war, and we've got this announcement or this monetary policy adjustment that has been made by the Bank of China. Okay. Going back to the chart, of course, on gold, we said 2600. If we last week, we said if we close above 2600, let's expect some role reversal. Didn't quite dig into that level, 2600. We went as low as 2602. So for some of us who would have had those pending orders, those did not get activated. But you take note of where that correction starts. You mark it out. Right, so we close above and you get your entry basically on Friday, and you got it also yesterday, coming back, revisiting that point. So you will see actually if you go to the 50 minutes time frame, it becomes much more clear, right? So resistance, we fail, finally violate, and then we go tested once, two, three times, we pushed, right? Twice on Friday, the 20th, and did a bit of a, I would call a liquidity grab where we kind of go slightly just below it and then we push higher. Uh, Same thing again. We've been, I mean, since Friday, Monday, we've just been getting new record highs. Today, also the same thing, a new record high, sitting at 2650, which we spoke about last week. We said 2650, we get there, we might that's the target, right? So we're gonna eat it piece by piece. So we got to this point, correction again, violation, and we come back into it, retest. This is today. I missed it, right? So that buy opportunity that has been missed. But for anybody who caught those buys yesterday, the 23rd, I think that would be what, maybe 300 pips in? Yeah. about 300, close to 400 pips in. We're not gonna cry over it. It has happened. It's fine. What else can we do? Of course, if you go to the 1 hour time frame, it seems that you don't have that clear role reversal, right? But on a lower time frame, you can play those tactics, and you can see there it is. It comes, digs into it, and then it pushes up. So where to from here? Where to from here? It seems for now it's best that we play it on a lower time frame. Let us mark it out. See? Boom, down, up, might come back into the zone. This is where I want to have my pending orders for a buy. 26.48, because we've just violated, of course, 26.50. But those who are expecting it maybe to just only coming to this point and rest, it might actually go even lower and confusing. You think, yeah, it's not holding. I will put it here. 26.48. That's where the pending orders will be. Yeah, sure, 26.50. It makes sense. As you can see, that's where the market failed to close above, at least for 30 minutes or so before eventually violating. So yes, it's a significant level. You can have your pending order there, but understand the risk that it could come into just dig a little deeper before pushing higher. Is that making sense?
Yeah.
So I don't want you to miss that entry at 26.50 because, yeah, sure, maybe it might not dig deeper. So if you are going to enter 26.50, you're just don't maybe go in that aggressively. Only perhaps if it pushes, it creates a new high, then you might add more positions, right? But we're playing the structure. We are simply playing the structure. Where's my pen? Pen. My pen is not showing. Okay, let's zoom out. Pen. Oh, there we go. There's my pen. So this was previous, of course, resistance. What is resistance? Gets violated. Boom. We come back into it. Roll reversal entry. Boom. Roll reversal entry. Boom. Now, where it's reacting, see that? Boom. Then this is resistance. We expect it to come back revisited. Here's your second entry at 26.55 and go for it. Nice and clear, nice and easy, lemon squeezy.
Yes.
Right? Simple as that. So that's our gold. It will not play games with us this week. One way or the other, we have to get something out of it. Right? So 26.48. We'll have those pending orders 26.50, between 26.50 and 26.48. We'll buy it where it is, where it has 10 currently. We close above that 26.55. We will look for opportunities to compound on this one. Right? Euro USD. Let's look at Euro USD. What does it have? Let's look at the. What do we have here? What do we have? Euro USD. I'll mark out what sticks out of course first. I'll mark that out. We know that's where we're going. What levels can we mark out here? That makes sense. Sometimes you have to walk away, come back, review your levels, see if they make sense. If not, this was, of course, I think last week, Wednesday, with the interest rates. Let's see. Yeah, the 18th interest rate cut. Closed above. It was extremely choppy. We've closed above, so I would say now we're in bullish territory. So how do we play this? Let's go to the 1 hour time frame. How can we play this? Let's mark out this. Right? It's choppy, but let's assume this is support. Liquidity grab, or some would say a fake out. go back into bullish territory, support, support, support. We fail. You see, I mean, what do you call this? What do you call this? You looking at this yesterday, you're thinking, okay, no, I mean, it's quite obvious I should be buying that support. I mean, we just had a fake out, we've closed above again. I'm gonna buy, and then this happens to you. If you're using the wrong lot size, there goes your account. So,
Yeah.
so yeah, we just want to trade with caution. I think the market is still engage in this, decision by the Fed to cut interest rates. There's still a lot of speculation.
It looks so undecisive.
Yes, because if you look at the dollar index, it's going sideways. So this,
Yeah, people don't know what's going to happen. So everybody
mm,
just be careful in a
right?
way.
We're missing that what's the word that I'm looking for? That commitment by the market. But it's something just clicked in my head. This could be attributed to something in terms of the economic calendar. This move is just too significant to just be purely based on uh price action. No, I think there was definitely news maybe that could have pushed this down.
There wasn't any news. I was very active in the chat that morning. It happened in the morning around the 8 a.m. my time. There was no
Ah,
the news that was supposed to come out in 1 hour time was GBP, CPI, and I
mm,
think there were some couple Euro CPI. Sorry, not CPI. What do they call it?
mm.
Is it PMI? Yeah,
EMI, yeah.
yes. Yeah, S&P Global Service PMI. There were some couple ones on Euro as well during that day. But it all happened, even across with the GPU, same thing happened, but
Yeah,
it
yeah.
ruled the sell on GP. Just
Hmm.
on Euro, it's just kept.
Interesting. No, we'll look into that. We'll look into um okay. Let's see if this makes sense, what I'm about to mark out here, because they might play tricks on us. We want to buy. I would say, is it fair to say this is resistance? I would say so, because
Yeah, it
previously it
is.
was quite clear that price is above, it's above, it's above, right? It's above, it's above. We need to see it push, and then we can say no, definitely now support we can buy
Yeah, like
to attempt, right? So that's what I'm looking at. That's what I guess my logic is dictating. But before maybe we might do this, okay? Because this was previously resistance, previously support, right? So down violation retest, as you can see, anybody who was looking for that sell, they caught it there. Now I would say bulls, or rather bears, are saying, okay, now that's done. We've definitely closed below this starting point and another starting point here for those sellers. We wanted to see a sellers want to see continuation, right? Down, 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 correction, down, 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 correction, down. So that hasn't, it didn't play out. So bulls, or rather bears, maybe not so dominant anymore in this picture. So we're looking for bulls right now. Let's expect a correction at this point. Pending orders at, or rather between 1.114, or let's say 1.40, and 1.11, let's say 36. So within this region here, we can have some pending orders. Try, put 2. There we go. And what I expect is a move to the upside, come back into this point. If I can observe that, another 2 trades, maybe 1, then we're pushing higher. We know definitely that we should, be buying. Yes, indeed, we should be buying Euro USD, GBP USD, just merely based on the simple understanding that we are risk on. And remember what we said, risk on is when the dollar is weak, right? That's when we are risk on. Now, um, we understand also, which is something I think I'll talk about starting from tomorrow, interest rates, lowering interest rates depreciates, if you know, it depreciates the value of the currency. So we've had a 50, quite a big jump or cut rather, 50 basis points cut by the central bank. Uh, that definitely weakens the currency. Does that make sense? It weakens the dollar. So if the dollar
Yeah, it's
continue,
it does
yeah.
it does weaken the dollar though, but like one thing that I keep pondering about,
Hmm.
if you look at the interest rate of the pound now, because I think in reality we can say it's like the closest competitor with the US dollar, the
Who's that?
pound sterling. They both have 5% as their interest rate currently.
Or you mean who? The pound?
Yeah,
Yeah, sure.
they
Um,
both have 5%. So I was thinking, was it really supposed to make that much of a difference? Seeing
uh,
now
I,
they
I
both have this
I
thing.
fully get it, but the sentiment is driving which currency becomes much more attractive right now, right? So usually the driving force behind the market can be, well, the biggest driving force would definitely be economics coming out of the US economy, right? So um with these two currencies or economies with very similar interest rates, with both, of course, cutting interest rates. We've got the Bank of England cutting rates. We've got the US also cutting rates. But with the US cutting rates is quite significant, right? Yes, both are, significant, but the dollar holds more weight. So them cutting
Tomorrow.
those interest rates is something that has been much anticipated for some time, right? At least 2 years and hasn't been seen or hasn't happened at least in 4 years. So this is an opportunity for those who have been holding because um remember your currency is also a it's a reflection on bonds of that particular country. So for the longest time, investors haven't had an opportunity to really take on the type of risk that yields exponential returns. A big chunk of their money has been under, bonds, or let's say the dollar, right? The dollar, because of those high interest rates. So when you lower those interest rates, you're taking away that incentive to keep on holding on to the safe asset. So we rotate out of that safe asset into the bonds. Sorry, not into the bonds, but into the stock market and other riskier um, assets as well, right? So yeah, definitely bullish on GU. My only, I would say, concern is the fact that, well, the dollar hasn't really broken that level that I we spoke about before the interest rate cut.
Yeah, waiting for the GDP data.
Mm, we're still stuck up there. Let me just quickly switch so you can see it. Dollar index,
Maybe
DXY.
the GDP data on Thursday would make it to move.
I beg your pardon? The line is breaking.
I said maybe the GDP data
Yes.
would make it to decide the direction on Thursday.
Mm. We'll look at the economic calendar. So look, yep. So this is the level that we said we violate. Interest rates come out lower. We might violate this level. Role reversal, push lower. That would have been clear exactly why they're not going anywhere.
Confused fellas.
Mm. So that's
Don't
the
know what to do.
situation we have here. That's the situation that we have. So
I
you
hate such market the most.
yeah, yeah, it's not always, I guess, going to be smooth sailing, but we work with what we have and it shouldn't hold us. We shouldn't have analysis paralysis, right? We need to
Yeah,
make
sure.
decisions. Um, and clear ones, we follow a system, or rather a set of criteria that needs to be met. We say X, Y, and Z, nice and clear. As you can see, I mean, this analysis is rather very quick, simply looking at price action. So we know in terms of the direction where we should be going. Our concern is just that we haven't really seen that bearish momentum on the dollar breaking that key support level. So it makes us a little, but we are looking to buy Euro USD, gold, gold. Who else? Who else? Who else? Who else? Of course, AUD USD, we would want to buy. This is the pivot point indicator, just helps us with the targets. I will show you this at a later stage. I want you to purely work on price action for now. What time frame am I on? Let's see if it will make sense on what time frames. Up, down, up. Okay, boom, going. If you want to catch this, you could have your buys at this point. It's that easy, right? It is that easy. AUD, we're looking for those buys. Nasdaq still has some room. It's a value trade compared to Dow Jones, which is at record highs. Makes me uncomfortable. I don't want to trade this, even though it's one of my favorites, but it makes me uncomfortable, at least with Nasdaq. No, I was looking, was that the Gem Index? The Gem Index, yes, but Dow Jones as well. Yeah, also at record highs. So Nasdaq is the only one, as we play this risk on sentiment, as we try and play it out as much as we can. We, of course, are going to assets a value trade because we've been there before. We know where we're going. So that's why it makes me much more comfortable compared to others. Lower time frame, resistance to came all the way down, violated, retested. Okay, retested, and then of course that was when? What day was this? I think it was early last week, or was it Friday? Friday, yeah, Friday last week. Friday, retest pushes up today, gives you another opportunity to enter. But now you wouldn't have seen this opportunity. It wouldn't have been that obvious. Why? Because this is dynamic support, or we can also call it dynamic resistance if it's at the top of those candlesticks. So we use moving average lines to identify that invisible level of support and resistance, right? Exponential moving averages are also known as dynamic support or resistance, because sometimes you mark out a significant level and you say, this is where I'm expecting it to come in, but then it doesn't quite dig into that level. It tends before, then, oh, it found dynamic support. So I use basically, I think it's 3 or if not 4 moving averages. The first one, let me start with the lowest value. Work with me. 20 EMA, followed by 50 or 55. Some might use a 55. EMA, 100. EMA, 200. EMA. Now, maybe perhaps before we go into how I would use them and what they mean to me, what are the functions, anybody, of a moving average line? Excuse me. What are the functions?
I think the average is it the main price, the average moment of price. It helps to measure that.
Yeah, I see. Okay, that's maybe a little too technical, but how can I put this? How do you use your EMAs? What function do they serve?
Yeah, I think to identify a trend direction,
Perfect.
Yeah, trend direction.
100%. So, yes, in this day and age, we have a visual presentation of the markets compared to in the early days. We can clearly see where price is going, giving us a series of higher highs. Now, sometimes we would use a trend line, of course. In fact, maybe in most cases. But of course, a trend line is just that. It's a trend line, and it's definitely, I would say, subjective and not really objective, because my starting point and the ending point won't necessarily be exactly like yours, right? But the whole point of using a trend line is to, especially in a bullish trend, you're trying to identify possible points where it could get rejected, giving you an entry, right? Boom, boom, up, up, it comes back. You expect it when it gets to this point, it will hold. So, for example, I'll just stretch it out. Okay, if price was to move up and then it comes back down, if it touches that, I would, likely probably enter as well. But then it's not the only function that it has as a trend line. It will help us, to know quite early that we could have a reversal if, price violates or closes outside of that trend line. Then we can have that early warning to say, okay, maybe that bullish momentum is done and I should be looking for sales, right? So now the EMA, or your moving average line, also serves the same, if not similar, um, task, right? So some would use one, some would use multiple, but it is there to act as a trend line. So a bullish trend is when your candlesticks, which represent price, are above your moving average line. That line is meant to act as support and resistance. Okay, it's not the only function that a moving average line has. You are able also to measure the momentum by observing a divergence or conversions of your moving average line and your candlesticks. So the wider the divergence, in other words, the act of the two moving apart, then you will see also that those candlesticks also tend to be a bit more elongated, right? And when they come closer together, I'm talking about, of course, your candlesticks and your moving average line. That is known as convergence. And that's where we start to lose that momentum. But it is also an opportunity for you to then find entry with the expectation that the market will continue. Does that make sense?
Yeah.
Alrighty. Now, in this particular chart here, I've got the 50, I think, moving average line, 55, and what is this one? 20. Now, when you have two moving average lines, you will also observe divergence and convergence. So as you can see, it crosses, it opens up, it converges, crosses, opens up again. So currently we crossed, became, we built up bearish momentum. We started to lose that momentum, and then it crosses again, changing direction from bears to bulls. So we're currently in a bullish momentum. The disadvantage of not only moving averages, but most indicators is that they are lagging by nature. I think for somebody who's only looking at your moving average lines for entry, well, your entry was supposed to be here already. And that could have been easily maybe been established had you just simply just put a static horizontal line and went back into the chart. So if you only rely on your moving average line to confirm the obvious, then your entries will likely always be late. Right? Maybe somewhere here. Only, I mean, we started there, went up, 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 and then only then does it retest. So you've missed quite a bit. Does it make sense?
Yeah.
Yeah. Yes. So, like I said, lagging by nature is like most indicators. But yeah, indicators are not the they can't tell you the future in most cases anyway. They confirm they should, or the type of engagement we should have with them is to use them as confirmation tools. They should confirm what we already know based on our own findings, based on our own analysis. We should not treat indicators as signal providing tools or instruments, right? We only consult them to say, hey, this is what I've seen. What is my indicator telling me? Can I confirm what I'm seeing? But I'd like you to, rely less on them, right? And rely on your findings, your own findings, if I can put it that way. But fantastic. I use them quite a bit when I do remember anyway. I was reminded by a trader on Friday who caught a nice buy on gold just simply using EMAs. So sometimes I forget, honestly, that I could use them so that it helps me with my analysis. So 20, 50, 100, 200 EMA, the higher the value, the more significance it plays, especially, of course, as a trend indicator and as something that's going to help you with support, dynamic support or resistance. Okay, so a 200-day moving EMA is a significant level of support in this instance. If we were to come into that zone, it's not often that it would be violated easily, right? So you could use that as your entry. Now the 200, of course, because it's a bigger value, it is usually something that I would look at to establish the long-term trend. And if that's violated, it's quite telling, right? The long-term trend and the long-term support. So I would say anybody who is a investor, maybe position trader, you're going to see them using a lot of the 200-day moving average line. The 100 is something that I also use. I would say this is for, let's say, maybe day traders and swing traders like myself. The 50 might be for also, let's say, the day traders mainly. The 20 would be a great one for those who are into short-term trades. Scalpers would be looking at that as well. So you could have all four on one chart, right? Or simply choose which ones you would want to use, right? I think it's not often that I would use or have the 200-day one displayed, especially on my MetaTrader platform, but I don't mind seeing three, which is the 100, the 50, and the 20. For the simple fact that I don't want my chart to be busy. I need it to be as clean and simple as possible. If I can achieve that, then less mental noise for me, right? So that's basically your moving averages. I wanted to make sure that we get them out the way. Is anybody using EMAs? Dynamic support and resistance. Is anybody using them?
Yes, I'm using them.
Oh, you use them, okay. Well, no problem. That's great. What chart are we looking at? Nasdaq. So Nasdaq, let's finish our analysis. Okay. I think if we close above here, then we should be okay. Then where are we going? Okay, let's zoom out for our. Would you say this is a fair level? This one, yeah. Previously, here's my pin. Previously resistance. Oh, let's try that again. Resistance. Violation, up, up, up. New highs, come back down to that same point. Roll reversal. Boom. Before pushing up and losing momentum, then failing all the way down. So We are coming here. 2120. 2120. Don't be afraid. Like I said, it must not paralyze you. You must definitely get what the market has taken from you, one way or the other. But don't fight with it. Don't be too personal. Wait for that clear entry, right? So somebody out there, of course, is already going into this trade as they see it maybe doing some sort of accumulation. It's perfectly fine, but it's what we would say an aggressive bull. It would be an aggressive bull. Some might want to observe maybe a bit of a push to the upside on the hourly, a clear break and close above this price point, right? Because yes, we closed initially above it, then immediately closed below it. So let's see how it plays out, right? This is an hour time frame. This candlestick will be done in about 25 minutes. Will it close above? If it does, let's forget the 15 minutes. Let's see what can we do. Are we going to observe it come back down into that zone now as a clear level of support? If so, goodbye at that point. Any other chart that might be showing you flames that you need clarity on? All good?
All good.
I think let's leave it here. Public holiday.
Yeah.
Yeah. So we've done a technical Monday. Looked at gold, Euro USD, AUD, GBP USD, and Nasdaq for those entries. We are bullish. The dollar index is, rather going sideways. Did we look at the dollar index? Yeah, we did. Rather going sideways. I think let's close off maybe with looking at the economic calendar so we can see what could our trade plans null and void, if that's the right term. Null and void.
So Lebo?
Yes, sir.
Yes, on your MT4, which index is called Hindu
Yeah,
on your
you find a lot of brokers, they would, term it differently, but Indu is Dow Jones for me. Let me check.
US 30.
Yes, US 30 on my side. I don't know
Oh, I
what
see.
Indu means to them, but yeah,
All right.
Dow Jones with this particular broker. Euro USD, or rather Euro.
I
Yeah,
wonder how you could not figure that out.
I beg your pardon?
I said, I wonder how you couldn't figure out what Hindu means for them. Indiana Dan Jones.
Yeah,
Have you not
maybe.
heard about Indiana Jones?
You learn something.
I guess that's what they want to write.
Yeah, I learn something every day, I guess. Indiana Jones, Dow Jones.
Yes, Indiana Jones.
Yeah,
Dan Jones.
it is. Okay. No, thank you. Thank you for the education. Um, Euro USD, sorry, why do I keep on saying Euro USD? Euro yesterday, Monday the 23rd. We had some, important manufacturing and services data coming out. Extremely negative, disappointing, right? Below the forecast, let's quickly just go through it. Euro manufacturing, previously 43.9, came out at 40. What am I seeing here? Oh, it's the only thing that actually came out. Okay, so the forecast was 44.3. They were expecting an expansion of some sort, but 44.3, yeah, sharp. We didn't meet the expectation, but we were higher than the previous month. Forecasts are just forecasts for me. I want to compare apples with apples. So 43.9, we've moved to 44. That's definitely an ever so slight expansion, but an expansion nevertheless. And by the way, when it comes to services and manufacturing data, there is a global standard of measure. Does anybody know it?
Mhm.
50. Right. So below 50, that is a contraction. It shows that the economy is slowing down. Above 50, that is an expansion. Shows that things are okay and healthy. Okay. So what we do have, we've got most of these below 50. So that's manufacturing. Yes, below 50, but a slight improvement, but still below 50. French services PMI, that is 48.3, coming out of a expansionary territory, coming out of 55. So quite a big drop for the French. Remember, they're all euro, so the French, the Germans, who else uses the euro? Has anybody checked? I forget. I think it's shucks. I've got a list, but yeah, it just escapes me. But it's something that's easy to find out who's who. But they're not going to always list all those countries. Some are quite small economies, so they'll speak about the big ones, Germany and France. Okay, so services PMI, that's low. Germany manufacturing, oh, this is definitely bad, especially for Germany, which is a big manufacturing sector. They've been struggling. They've been below 50 for a little while. Germany is actually basically in a technical recession. That is something that we can confirm. I just want to see. Yeah, they've been, check this. Since August 2022, they've been struggling. They've been below 50, right? 42, coming from 42, it's now worse. Services, 51.2. We are almost out of that expansionary territory. We've contracted to 50.6. More manufacturing data, 45 to 44. Services, 52 to 50. Definitely that is contributed to what we saw earlier, which is this picture. It's massive sell off.
I was on the chat.
On Euro setup, but I don't remember it. I don't know if I did it with you. Broke out of that very structure. It was extremely choppy. I mean, as you can see, got stopped out this trade a couple of times. Right, it was meant to be as simple as this. Let me change the color of my pen. Okay, I can't change the color of my pen. Let me try one more time. There we go. It was supposed to be up, up, up. Right, previous level of support, and then push higher. But this, of course, volatility, we can, attribute some of that, of course, to the lower. Now I know why I had it there. The violation of this bearish structure was already had already taken place. Now, this was leading up to the interest rate decision by the Fed, the central bank of the US. So my game plan on this one, no, it's all coming back to me, that violated not only this up, 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 down, we're going to buy, shoot, right? On last week, Wednesday, it was just supposed to be a nice move to the upside. So yes, some profit was made on comeback. Would it have maybe given us another opportunity, an entry opportunity today? Yeah, I would say so. The 24th, about 1 o'clock, I would have caught it. Pretty much then violated as a buy. I would have had to, of course, do something like this. Look at the crowd, see if I can catch it. As you can see, we didn't quite dig into that. Rolling averages would have acted on that one. But anyway, let me go where that sell-off is coming from. It's all there on the economic calendar. Negative data all around for services and manufacturing out of the Eurozone. How's the audio there? Because on my side now, this thing is just spinning and spinning, not allowing me to switch between screens.
It's perfect.
It's perfect. Okay, great. Hopefully it will make up its mind so I can change screens. It's not allowing me. I wanted us to look at that calendar for today to see what's coming out that could potentially mess up our trade in this part of the program. Wait for the program. Okay, I'm waiting. All right, I think it's okay now. Yeah, what did I click? Hold on, hold on. I did, honestly. Sorry, bear with me. Bear with me, bear with me, bear with me. All right. Yeah, I think I can move. Yeah, there we go. So that was Monday GBP out of also they also had manufacturing and services out of the pound, a contraction also. At least they're still within expansionary territory. So 52 to 51, 53 to 52. GBP USD may have seen a dip probably to the downside before continuing with the bulls. Yesterday also, the US, this definitely would have taken center stage, missed it. Flash manufacturing and services PMI out of the US. Services tends to hold more weight than manufacturing because services out of the US that contributes plus 70 plus percent to GDP. That is expansionary territory, 55.7. Yes, it has cooled down 55.4. Who is doing this? Let's see. Who does this stat? S&P Global. It's important that you go and read to get context on these, please, especially these ones, right? So you get the S&P stats on services and manufacturing data out of the US, right? And you also get one that is put together by, who is it? Somebody help me out. I'll tell you. Services, ISM. The other one is by ISM. Is this organization here, Institute for, I forget what that is for. ISM. This is the one. Or Institute of Supply Management, right? So they also give us data on services and manufacturing. So I urge you after this session, just for today, read the PMI one, the S&P one, read and get context. If there's anything, maybe we'll look into it. If there's something that you don't understand, we can go into it tomorrow to, put it into context, right? All good? Let's move on.
All good. Okay.
Righty. So Tuesday, today we had the Aussie with their interest rates, 4.35 unchanged. It makes sense. They haven't really sounded as dovish yet. They're not really willing to move, but we'll get deeper into these tomorrow as we start talking about inflation and interest rates, right? So as you can see, I already have it open for you to for tomorrow. Monetary policy in plain English is something I'll be talking about with you. Okay, and I've tried to keep it as simple as possible for anybody on any level of trading to be able to understand it. Tomorrow, what's the calendar looking like? Relatively clear. No major news that might shake up the markets coming out of the US. Yes, we've got inflation, CPI. So tomorrow is, remember I said tomorrow we'll do interest rates and inflation. So CPI is one way of measuring or gauging your inflation, right? So that is CPI coming, or inflation data coming out of Australia tomorrow. Currently sitting at 3.5%. So you kind of understand why they didn't lower their interest rates 80 hours of this morning today and kept them unchanged. They are still far away from that, I would say, universal target that a lot of central banks use on inflation. And we'll talk about that target tomorrow. What else? So that's, I just wanted to look at Wednesday. So Wednesday. Yeah, I think it's all clear with the exception, I would say, of this medium data I don't think it will play a significant or a major overreaction in the market. It's new home sales and crude inventories. It shouldn't shake things up that drastically. So I think we can leave it here for today. And then we will pick up tomorrow. Any questions in closing?
No, thank you. Thank you, Lemon.
It's
Fine.
only a pleasure. Thank you. Thank you very much, traders. I trust you had a great session, right?
Thank you.
Everything makes sense. Let's meet tomorrow, same time, same place. Yeah.
Thank you.
Yeah.
Bye.
Yeah. See you tomorrow.